In 2016, the United Kingdom made the choice to exit the European Union, causing significant global repercussions. Following extensive negotiations, the UK formally left the Union in January 2020. Brexit stirred big promises, more freedom, booming trade, and a stronger UK economy. But what really happened? Did the dreams of prosperity turn into reality, or were they caught in a web of unexpected challenges? We're examining the Brexit predictions made by notable economists and comparing them to the outcomes we're living today. How have businesses and the economy adjusted to this monumental change? Prepare for a straightforward look into the complex world of Brexit's economic effects. It's a story of expectations, reality checks, and the resilience of a nation facing new global dynamics. In the years preceding the 2016 Brexit referendum, the economic outlook in the UK was characterized by cautious optimism. While the aftermath of the 2008 global financial crisis lingered, signs of recovery were emerging. Unemployment rates were declining, and there were positive indications of GDP growth. Nonetheless, there was an underlying sense of concern among certain segments of society. Issues such as immigration, perceived loss of national sovereignty, and a desire for greater control over domestic policies fueled the rise of Euroscepticism. Within this context, the idea of Brexit appealed to some economists and politicians who argued that departing from the EU would unleash the UK's full economic potential. They contended that EU regulations and bureaucracy were hindering growth and innovation. With the liberation from these constraints, proponents believed that the UK could chart its own course, establish new trade agreements globally, and enhance its competitiveness and flexibility. Supporters of Brexit envisioned a promising economic future. They forecasted that the UK could negotiate advantageous trade deals with non-EU countries, especially with rapidly developing economies like China and India. They argued that this would result in heightened trade, investment, and job opportunities. Furthermore, they anticipated that deregulation and tax reductions would further spur economic expansion. These hopeful forecasts faced skepticism from various quarters. Numerous economists and financial institutions cautioned against potential adverse effects of Brexit, such as diminished access to the EU's single market, trade disruptions, and reduced foreign investment. They warned that the intricate process of negotiating new trade agreements would be lengthy and that the UK's economy could suffer during the transition. The discussion surrounding the economic ramifications of Brexit emerged as a focal point of the referendum campaign. While the Leave camp emphasized the potential advantages of autonomy and control, the Remain side underscored the risks and uncertainties tied to EU withdrawal. Ultimately, the British electorate narrowly voted in favor of leaving the EU, initiating a period marked by substantial economic and political transformation. In the period leading up to Brexit, numerous advocates, including economists Ryan Bourne, contested the idea that the EU delivered significant economic advantages to the UK. They asserted that departing from the Union would unleash the UK's potential for autonomous growth and prosperity. This optimism stemmed from the belief that, unshackled from perceived EU constraints, the UK could forge new trade agreements and position itself as a more flexible and competitive economy. Here's what Ryan Bourne said at the time. Brexit is a constitutional decision to repatriate powers. It takes some lack of imagination to believe the UK is currently the pinnacle of economic dynamism, and that no policy framework could, in the long term, increase the economy's size or growth rate relative to continued membership. However, these optimistic forecasts have not materialized. The International Monetary Fund presents a somber outlook, projecting a significant underperformance of the UK economy compared to other major economies. This lethargy is attributed to various factors, including high inflation, escalating interest rates, and the repercussions of Brexit itself. Despite a modest projected improvement in 2024, the UK's economic prospects lag behind those of its G7 counterparts. Initial prognosticians also indicated that the pound and housing market might encounter temporary obstacles, such as depreciation, before rebounding and ultimately benefiting from economic recalibration. Former Chancellor George Osborne even envisioned a potential long-term positive in the form of an 18% decline in house prices. However, these forecasts have not materialized as anticipated. Another significant aspect of the pre-Brexit narrative centered on the ease of securing new trade agreements and attracting heightened investment post-Brexit. Business leaders like Carolyn Fairbairn, Director General of the Confederation of British Industry, expressed confidence in adapting to change and enhancing recruitment opportunities beyond the EU. At the time, Carolyn mentioned, it's also worth noting that the EU has played only a limited role in attracting international capital to the London property market, with only 12% of buyers coming from Europe, according to LCP's research. In the unlikely event of a wholesale withdrawal of European buyers, there will be very little net effect on the market. Similarly, Phil Foster, executive director of the Institute of Directors, emphasized potential advantages for British business owners. The alternative view is that the Brexit will actually improve recruitment options for UK businesses. There's a very real possibility that the UK may now introduce a points-based system, such as that used in Australia, which could result in us welcoming in higher quality candidates. However, the anticipated increase in trade and investment has not materialized. Entities such as the Centre for European Reform and the Office for Budget Responsibility highlight a reduction in Britain's economic output and a long-term net expense linked to EU departure. The OBR's assessment specifically indicates that Brexit has contributed to a 4% decrease in long-term productivity compared to staying in the EU. This, coupled with heightened bureaucracy in UK-EU trade, has notably affected the competitiveness of smaller British manufacturers and contributed to an overall economic downturn. The period preceding Brexit was marked by bold assurances from politicians, portraying a vision of effortless prosperity post-EU departure. Liam Fox, a prominent Brexit advocate, famously asserted that negotiating a new agreement with the EU would be, quote, one of the easiest trade deals in human history. These lofty expectations set the stage for a potentially challenging post-Brexit reality. Both public sentiment and expert analysis largely acknowledge the adverse economic consequences of Brexit. A majority of the British public, over 2/3, believe Brexit has harmed the economy, a sentiment echoed by many economists. Nevertheless, some economists in support of Brexit argue that the UK's economic challenges predate Brexit and emphasize the potential to capitalize on newfound freedoms outside the EU for future growth. This ongoing debate underscores the complexity of untangling the myriad factors influencing the UK's economic performance. One of the most noticeable outcomes of Brexit has been a shift in immigration patterns. The significant decrease in EU migration has been partially offset by an uptick in immigration from non-EU countries. This unforeseen alteration has presented both obstacles and potential advantages for the UK's labor market. While certain sectors heavily reliant on EU workers have encountered short-term economic disruptions, the shift also paves the way for a more discerning, skill-based immigration policy. Nonetheless, the UK's employment rate has yet to fully rebound to pre-pandemic levels, indicating persistent challenges in filling crucial roles and achieving robust economic growth. The initial hopelessness surrounding the economic advantages of Brexit has given way to a more nuanced understanding in light of intricate realities. Despite optimistic forecasts, the complexities of trade negotiations, tangible economic consequences, and unforeseen obstacles have reshaped the narrative. The intricacies of trade negotiations became apparent as the UK embarked on the formidable task of establishing new agreements with various nations. The anticipated easiest trade deal in history with the EU evolved into a protracted and challenging endeavor, resulting in an agreement that introduced new trade barriers and complexities. Negotiations with other major economies have also proven time-consuming and yielded limited outcomes, casting doubt on the initial assertions of swift and beneficial trade agreements outside the EU. The actual economic repercussions of Brexit have fallen short of the upbeat predictions advocated by its supporters. The International Monetary Fund projects significant underperformance of the UK economy compared to other major economies in 2023, partly attributing this sluggishness to Brexit-related factors. Moreover, the Office for Budget Responsibility indicates that Brexit has led to a 4% decline in long-term productivity compared to remaining in the EU. This, alongside increased bureaucracy in the UK-EU trade, has hindered the competitiveness of British enterprises, especially smaller manufacturers. The effects on trade and investment have yielded mixed outcomes. While the UK government has secured some new trade agreements, their overall impact on the economy remains uncertain. The Centre for European Reform underscores a reduction in Britain's economic output, suggesting that the benefits of new trade deals haven't fully offset the losses incurred from exiting the EU's single market. Similarly, investment has not experienced the significant boost initially anticipated. The labor market has experienced a noticeable transformation, marked by a decline in EU migration, partly balanced by an uptick from non-EU countries. This unanticipated shift has brought about both difficulties and possibilities. Although certain sectors dependent on EU labor have encountered temporary disruptions, the transition provides an opportunity for a more discerning, skill-focused immigration strategy. Nonetheless, the UK's employment rate has not fully rebounded to pre-pandemic levels, signaling persistent obstacles in filling essential roles and attaining strong economic expansion. The significant disparity between pre-Brexit economic forecasts and current realities serves as a stark reminder of the inherent complexities in major political and economic decisions. It emphasizes the importance of nuanced and well-informed discussion, rooted in thorough analysis and recognition of potential risks and uncertainties. While Brexit presented a clear choice in the referendum, its long-term consequences are still unfolding, unveiling unforeseen hurdles and requiring continual adaptation. The UK government has implemented various strategies to navigate the post-Brexit landscape. These include pursuing new trade agreements, investing in infrastructure projects, and introducing reforms aimed at enhancing domestic competitiveness. While some of these initiatives have produced positive outcomes, such as the establishment of new free trade deals with certain nations, significant challenges persist. One of the primary areas of ongoing adjustment lies in trade. Despite securing new trade agreements, the overall impact on the economy is still under evaluation. The loss of access to the EU's single market has led to heightened trade barriers and administrative complexities, particularly for smaller enterprises. The government is working to streamline processes and alleviate these disruptions, but a comprehensive understanding of the post-Brexit trade landscape has yet to materialize. Another critical focus area is attracting investment. Initial expectations of a surge in foreign investment have not fully materialized. The government is implementing measures to enhance the UK's appeal to investors, including tax incentives and regulatory reforms. However, persistent uncertainty regarding the long-term consequences of Brexit continues to pose a challenge. The labor market is also undergoing significant adjustments. The shift in immigration patterns presents both opportunities and challenges. The government is still developing a new points-based immigration system aimed at attracting skilled workers from across the globe. Nevertheless, concerns persist regarding potential labor shortages in certain sectors and the necessity to ensure a smooth transition for businesses previously reliant on EU workers. Our exploration of Brexit's economic predictions versus reality highlights the importance of approaching major decisions with cautious optimism and a nuanced understanding of potential consequences. While initial predictions painted a rosy picture of economic prosperity, the complexities of trade negotiations, the tangible economic impact, and unforeseen challenges have presented a more intricate reality. This journey serves as a valuable reminder that navigating significant political and economic changes requires not only hope for positive outcomes, but also realistic assessments and preparedness for unforeseen challenges. Embracing informed discourse, acknowledging potential risks, and fostering adaptability are crucial for navigating complex situations and shaping a sustainable future. As the narrative of Brexit's impact on the UK continues to evolve, I encourage you to engage in constructive dialogue, keeping an open mind to diverse perspectives and emerging information. By fostering informed discussion and critical thinking, we can collectively gain a deeper understanding of this complex issue and its long-term implications. That's it for today. To keep exploring and stay informed about the latest economic shifts and opportunities, make sure to hit that subscribe button now. We'll see you in the next one.